Gold is the one asset investors are told never to question. It is the last refuge in a crisis, the universal collateral for sovereigns, and the financial instrument the world trusts when everything else collapses. But what if the entire global system of trust in gold has been built on a lie of omission, on a weakness every insider privately knows, yet almost no one publicly confronts? What if the gold market, despite its trillion-dollar scale, still cannot prove what a single bar truly is? That is the wound SMX Security Matters has stabbed its fingers into and twisted. SMX, a tiny Israel-born technology firm listed on NASDAQ since March 8, 2023, presents itself as the company that can solve gold's oldest problem. Using a molecular marker system embedded directly inside metals and linking each scan to a blockchain ledger, SMX promises a shift from external certifications like stamps and refinery claims to internal truth, gold that literally carries its own chemical identity. But here is the contradiction. SMX has only 19 employees. Over the past 12 months, it lost roughly $44 million. Its market value floated around $2 million. Revenue barely appeared in filings. Under normal circumstances, a company of this size would be economically invisible. A firm this small does not normally disrupt a trillion-dollar commodity market or appear on the largest global stages for bullion policy. Yet in late November 2025, SMX's stock detonated. During regular trading hours, the price surged roughly 190%. After hours, it jumped another 50%. Trading volume erupted into tens of millions of shares. Microcap stocks do not behave this way under ordinary mechanics. They usually trade thinly, move modestly, and spike only under conditions like takeover rumors, revenue surprises, or major regulatory wins. SMX had none of these. Investors watching the tape saw a move that should not have occurred under traditional valuation logic. To understand how a company with no financial momentum became the gravitational center of the gold market's future, we retrace its timeline. On January 21, 2023, SMX signed a global exclusive distribution agreement with Sumitomo Corporation for non-ferrous metals. Under normal conditions, large conglomerates reserve exclusivity for firms with strong operational scale and proven deployment capabilities. SMX did not fit that profile, yet Sumitomo granted exclusivity while SMX disclosed no contract values or revenue guarantees. Investors were forced to interpret without hard numbers. Then came the SPAC merger with Lionheart III Corporation, closing on March 8, 2023, with a valuation near $360 million. Standard SPAC behavior requires that such valuations be justified by early traction and credible